side of this one church town, there's a gold dirt road to a whole lot of nothing. Got a deed to the land, but it ain't my ground. This is God's country. We pray for rain and thank him when it's falling, 'cause it brings a grain and a little bit of money. We put it back in a plate, I guess that's why they call it God's country. I saw the light in a sunrise, sitting back in a 40 on the muddy riverside, getting baptized in holy water and shine with the dogs running. Saved by the sound of a pin-found Dixie whistle in the wind, that'll get you heaven bound. The devil went down to Georgia, but he didn't stick around. This is God's country. We turn the dirt and work until the week's done.
Welcome again to the latest Think Realty webinar. I'm Kurt Power, Sales Director with Think Realty. Very excited to have our guest today, Carson Passive Investments. Always a pleasure to have them on. Got to spend a little bit of time with Carson, his wife, and his two beautiful dogs, most importantly, in Tampa last week at the latest Think Realty conference. Think Realty is your number one stop for all things real estate investment education, networking, resources. Use us, leverage us to build your life with time, wealth, and purpose. And really what everybody's looking for right now, big buzz term in our industry, is recession-resistant investing strategies. Carson actually has a great product, a great investment vehicle that performs in great markets, normal markets, but most importantly, it performs in these down markets that we're experiencing, and who knows, we may be just in the entry point of it. So you guys are in for a treat today. Listen to what this man has to say. Mirek is also on here as well. We're going to get some great information for you all today. And just let you know, go to thinkrealty.com, become a member, get involved, get in the game, get your money off the sidelines, get involved. So I'm going to turn it over to Carson. Pleasure to see you again, man. I know it's only been a few days, but great to see you.
Yeah, absolutely. Good to see you.
Awesome. Well, I'll leave some messages in the chat for everybody, but if you guys have questions, the only thing I ask, use the Q&A function. Don't put it in chat, do Q&A. Makes it a little bit easier for us to follow along. And with that, Carson, take it away, sir.
All right, sounds good. This is Mirek. I am Carson. We're going to be walking through our current deal. Those of you that happen to see the video playing at the beginning of this, that was actually an actual video of the field. So I'll go ahead and get the slideshow started, and I'll go ahead and pull up our agenda, and we're going to go right here. Share this, and then we shall get going. So anyway, we're going to be discussing the Raspberry Unit Field. It's out in Ford County, Texas. This is between the Permian Basin and Fort Worth Bend Arch Basin, kind of near Wichita Falls. So we're going to introduce ourselves real quick. I have Mirek here. I'll let him speak about his ongoings and all that. Go ahead, Mirek.
Oh, thanks, team. Appreciate everybody jumping on. I know it's in the middle of the day. A lot of people are working. Me as well, doing multitasking. Pleasure to meeting everyone. My name is Mirek Karsmar. I'm actually a founder and managing partner for MK Investment. Most of my life, actually, I've been actually a technologist that got into investment several years ago as a single family investor, then got into myself into multifamily, which actually it's been for us very successful on the passive side and on the syndicator. We've done several deals. Lately, we actually sold one of our properties in Florida, and most of my investors are looking to invest now, reinvest, make sure that they can get benefits from tax and not paying the capital gains on the current sale. So just a little background. I actually live in Naperville area in Illinois. A lot of investors are actually, my investors are spread across the country. They're looking really for the next big thing. And I actually got into oil business several months ago. Fortunately, I was able to run into Carson during one of the conferences for multifamily. And that got me really interested because, as everybody knows right now, with the downturn in multifamily and then the whole interest rate chaos, all of my investors asking, Mirek, I want to invest. What's the next thing? And Fortunately, I was able to, we were able to pull in this deal, which is extremely valuable to not just from a tax purposes perspective, which we're going to be talking about it, but it's just the way that you look at the oil, and sometimes it's, it's a risky business. In this case, we feel, my wife, my partner actually in business, and our investor jumped in already on it, that it's really beneficial. So I'm looking forward to take you to this journey and get you excited, because there's a lot to be excited. So I appreciate the opportunity, Kurt. Carson is going to be driving a lot of it, but I'm going to give you really the angle perspective on why investor like myself and my investors should be looking into this deal.
Yeah. And mirek just recently sold a property at 2.25x, 60% IRR down there in Florida. Exited in 2 years. It's a very nice exit.
Yeah.
My name is Carson Jones. I've been an entrepreneur for 16 years, been involved in passive investing for 14 years, always looking for a good deal. And, really looking forward to this one. I'm going to go ahead and get on into the agenda. We kind of went into how we got here, like Mirek said, I just put a calculator to CapEx on a storage facility, and it just doesn't work. A lot of the numbers in multifamily and real estate, we just can't get there. This deal, I'll let Mirek share why he likes the deal, and then I'll go to bat after you. All right.
Absolutely. You can jump into the next slide.
Okay, just go ahead and jump into it. All right.
Yeah.
Why we like this project. All right.
So team, usually, and I'm pretty sure there's a lot of people there at multifamily. When we syndicate, I want to make sure that we cover why we like this project. So Carson, we can go to the next slide.
Okay.
A lot of my investors, they're looking really for how to diversify, find the value, and then how can you bring low risk investment to them, right? For a lot of my investors are actually looking for these three different things. When I was looking for investors for investment outside of the multifamily, this came up, and then I started evaluating, and we're going to be hitting some of these key points. Monthly cash flow, currently producing, right? Which actually, if you look at the low risk associated with this, it's already producing. We're not buying, you're not buying land, you're not renovating everything, you're not putting new drills in an area that you don't really know, right? Yeah. One of the biggest keys about this, most of my investors are W-2 employees or employees there, or businesses, small business, they're looking for tax write-off. Huge benefits, right? So if you look at on the screens, there's a lot of items that from, going multifamily through the diversification, through the value add, the low risk is really associated with that. And Carson actually is going to tell you why the low risk, why is the price the way that it's actually structured. But the biggest thing is, how do you actually take the field that has been running for 50 years, getting into a new technology that you can actually get a lot more oil, and then bring the benefits to investors? That's the biggest upside that I see on this deal. So I don't know, Carson, I'm going to turn it over to you.
Yeah, I'll just add, similar to real estate, most of your money is made on the front end when you buy the property. And, that's definitely the case here. We got it at $1 per recoverable barrel in reserves. For example, this is a 4,400 acre field. If we did 3D seismic and there wasn't, any oil being produced right now, it'd cost us $10 million just to go in and do 3D seismic. So a lot of the money, just like anything else, is made on the front end on the buy side. But all the production history we're going to go over, what it was doing before COVID. It's verifiable through the Railroad Commission. It's a public record. Another thing about the risk mitigation, it has 2 additional zones. Okay, there's one above and one below. So, that provides additional, later on in the future, we can go in there, and also provides upside in our rework program as of now. So it not only creates a situation where it, mitigates risk, it also provides upside, that zone above it especially. Most of the geological risks have been eliminated. This isn't exploratory. We already know where these zones are because we have well logs. And, it's not like we're going into new territory. So there is a Exxon study in the program we'll send out to everybody. It's in there where you can click on this PowerPoint. You can't click on it, but in the PDF we'll send out, you can click on it and pull that up. So I guess I'll jump to the next one. You kind of already covered the tax thing. The main thing about this is, Mirek already kind of covered a little bit of this, is on the taxes, you get a 15% depletion allowance every year. And that's till the end of time. It doesn't go away, after you recoup your investment. It's every year. And it's a little different from, most of y'all familiar with Section 179 depreciation in real estate. If you sell that asset within a 5-year period, you have to claim some of that depreciation that you wrote off in the beginning as capital gains. On this, after you write it off, you don't have to go back and count it as gains. But we're not going to get into the tax code. You need to talk to your advisor about your situation. We're not tax advisors. That's just how we've it's affected us in the past. So anyway, anything else you want to add to the tax?
Yeah, one thing that I want
Go
to add, and this is one of the biggest questions from my investor is, how can I offset my W-2? You guys in multifamily on real estate, you guys know how hard it is really to offset that tax from you just regular salary. Oil has a different structure, right? And you can actually take advantage of that, which is not available in multifamily. So that's why it's very attractive. I call this, killing two birds with one stone, right? You have a great opportunity to invest in oil that has a really low risk, a lot of value adds, but on top of it, you can offset all of your W-2, and you can get into the details on that. But this is a huge opportunity.
Yeah, and we are open to 1031 and IRA, just FYI on that tax front. So anyway, okay, I'm gonna move it forward. We're gonna introduce the Falcon production team here. Do you want me to take that, Mirek? Or I'll go ahead. This company was formed by industry veterans. They've worked together for numerous years, going back decades on various projects throughout the years. The company's newly formed, but we've already had a successful gas field that was already bought and sold and all that. So Jerry Bailey is our chairman. He's a former Exxon Arabia CEO. He's been involved in the oil business pretty much his whole life. So I'm going to jump over to Chris here. Well, there we go. Chris is actually the petroleum engineer that performed most of the due diligence out in the field. He was out there, I'd say 2 to 4 weeks, went over the equipment. You're going to see him in the video, and he walks through pretty much the technical presentation behind this. John Lyman is a senior partner, been involved in oil and gas and real estate for 40 years. William Chester is our geologist, been around a long time, 50 years, had, major roles at big companies, VP and all that. So been around the block a few times. And then you have Paul, our landman, our regulatory is Miller Consulting down in Austin. Also, Paul will be on the video talking about the economics and some other things about the deal. Regulatory is Miller Consulting, accounting is Petro Ledger. So one thing, since we're looking at the accounting, this does pay monthly. So your checks are sent out monthly. And I think that's about it on that. And you're looking at about, roughly 60 to 90 days before you get your first check after you make a commitment. So anyway. Anything else you want to add to that, Mirek?
No, I think there was a question from somebody in the group. I'm relatively new to the oil business. So just getting introduced through the Falcon and learning from Carson. Carson's been in that business for a while. I'm transitioning over just to learn the oil aspect of it. So just so everybody is aware, we're all learning, at least from my perspective, my investors. So I'm spending a lot of time with educating my multifamily investors. Why do we need to invest in oil, etc. I'm pretty sure a lot of people on this call are doing that. So there's going to be a lot of drinking kind of from the fire hose.
Yeah, as far as I'm concerned, I've invested passively in a lot of oil deals. I know enough to get me in trouble, and geology and petroleum engineering is a 4-year degree. It's a lot to swallow. I know enough to get me in trouble, but the main thing about any business is to partner with good people. We're not going to know every single thing about every deal, even if it's real estate. You're going to have people that are outside of your grid come in to help. So anyway, we're all about partnering with people that have years and decades of experience, which is what we've done on this deal. So
yeah, absolutely.
Anyway, I'm going to bounce to this slide. Project funding, the minimum investment on this is $30,000. Okay, first of all, for most of the examples throughout, we're going based on 60,000 and 80,000, and there's 2 phases of it. You want to go over this real quick, Mirek, or you want me to just?
Yeah. So the way I look at this, and it's easy to understand, is the whole project funding is for $7 million on 2 phases. If 50% is the working interest, so basically investors are getting 50% goes to the Falcon team for the project. They actually purchased the land, so they have all of the acquisition costs that it's been. But if you start looking later on the numbers, it's really comparing to multifamily, this is really a gold mine, right, or generational wealth. So if you look at 2 phases, the first phase is $3 million initial project funding, which we actually calculate, which we'll try to get 60,000 per 1% working interest, right? Where this is actually going to be part of the rework with existing drills, get them operational, making sure that we can start getting money, and then get to the second phase, which is the second portion of it, which is a full $4 million of drilling program, where you start now building new drills with new technology, which we showed at the beginning. So when I talk to my investors, I said, hey, a lot of people are actually getting trying to evaluate how much they can actually put it in. I said, the phase 1, think about this as an initial where we can actually get to the field, all of the drills into operational state, but you want to have a stake in the game for the second phase, because that's what majority of the upside is. We're not going to go through, read all of the items that are associated with the phase 1, but think about this. You want to be on a phase 1 where you're going to benefit from a second one. And Carson, I don't know if you want to go through details a little bit.
I'm gonna go ahead and pull into this other slide. Okay. Just leading off of what Mirek said, $30,000 investment. These projections, and if you look at the barrels per day, as I mentioned before COVID, it's verifiable that it was doing 200 to 300 barrels a day. On this rework portion, we're simply going in on most of these, reactivating and turning them back on, replacing equipment and lines. As of right now, we've already done one of these wells of the 6 to 7, and it's come in, it tested at 88, and I believe it was only supposed to do 30, so it came in way better than expected. So it should level off down around 50. So, but anyway, on this portion, we're going in and reactivating, but there's additional upside, because what I spoke about earlier is there's a zone above and a zone below. So we're going to go into 2 of these on the rework portion, and we're going to go into the zone above, and you'll hear Chris, the petroleum engineer, go into more details about, the other zones and the geology behind it and all that. But, a company about 3 miles away, roughly, has done 3 wells into that other zone. one came in at like 80 barrels a day, one came in at 191, and one came in at 400 barrels a day. You know, just to give you an idea, if we're only projecting 225, you know, if a couple of those wells come in pretty good going into that other zone, you know, we could walk away from this rework portion, you know, doing way, way, way better than expected. So that's one aspect of the deal I really like. It's got a really, really solid upside. So anyway, anything you want to add to that, Mirek?
Yeah, so this is going back to the, how do you estimate the risk, right? There's always risk of, our environmental stuff, but when I look at for my investor, and what I care about is really the price of the oil. What's the break even, right? The lower you can get, the better outcome I'm gonna have. So like comparing right now, the oil price right now at 75, what we're projecting is 225, and I think that's very, very conservative based on what we see from the rework already started. $21 is really a minimum, so there's a huge upside, but then a lower risk. So that's kind of a big thing for me.
Yeah, absolutely. I guess we'll we're gonna move on to the project one. I'm gonna let Chris cover most of this because they go over that in their video. Is that okay? Or unless you want to touch on that?
No, I think there's a lot of details, and like I'm gonna restate it again. It's
Okay.
kind of drinking from the fire hose. You're gonna see a lot of data. You just have to digest. So Chris does a really great job of explaining because he's a petroleum engineer, so he's gonna walk through a lot of these project steps.
Yeah, it is a lot of info. So, but yeah, he's going to walk through a lot of that. Let's go ahead and jump into, and Chris is going to walk through most of this and explain, how. I'll go ahead and let me back up. Sorry, got a little ahead of myself. But we're going to go into these new drills. This is the second phase. Okay, so we're looking at about a 3 to 6 month time frame on completing the first phase. We've already completed one and moving on to, I think, 2 more next month, I believe. But we're going to move into, you'll have first right to refusal. This portion of it is optional. So, the minimum, if you did say 60,000 on the first phase, and then the 1%, you would have first right to refusal, which would be 80,000 on the second phase, so you'll have first right to refusal on that. On these horizontal drills, when they go into a field, typically there's not much statistical variance once they come in. So that's why we have the high and low broken out the way we do. So for instance, if the first 2 wells come in at 325 barrels a day, roughly, that means the rest of them throughout the drilling program should stay about the same. You're not going to see huge jumps between what the first 2 did and the next 20 did. So there will be differences, but shouldn't be huge differences. So anyway, in addition, part of your investment when you drill down, you're going down in your horizontal drilling, and you'll see the slide, but eventually when you deplete that zone, you'll get to come back up hole. So you've already invested the 80,000 or 40,000 if you did a 0.5% to go down. It's only going to cost you about 3,000 to go up into the zone above it. So, there's additional investment above it later on down the line. So anything you want to cover here, Mirek?
No, like I said, I'm going to restate it. Same thing. Break even price, $5. This is very successful, which I think based on our analysis, it will be. Combining 2 things together, it's actually going to be generational wealth, depending on how quickly we can get to additional drills. But what I would focus as an investor is, how much I can make comparing to multifamily, because a lot of multifamilies are coming. It's like, hey, if I can do 2x, that's great, right? In this scenario, we're actually estimating 7x on these drills, and we can continue to drive, after the first phase, phase 2, which is going to be the first 2 drills done it, and then comparing that to what the rework does. So just continue to build on top of it.
Yeah, and another thing, what makes this considerably less risky versus exploratory and going into a new field is, we know where these zones are. Once again, we know where that oil is because we have well logs. In addition, we have Exxon Mobil's maps of where they intended to drill and all that. So it's already pretty much mapped out for us. I don't want to steal the show from Chris because he's going to be on video here in a minute. So this kind of goes into that, I'm gonna, unless you have anything to add, I'm gonna skip on
No,
so
you
we
can
can
go
get.
ahead. Yeah.
Okay. This is a breakout of the investment, and that kind of went into what Merrick just went over. When you get into the phase two, the upside really starts to come in, of the potential of this. So anyway, even on the low side, it's still a very, very, very solid deal. So anyway,
All right.
anything you want to add on that one?
No, this is, sometimes the projects multi-phase can be really confusing. So we did this
Yeah.
breakdown for our investors to understand that, what's expected based on the projected. I honestly, and this is how I'm looking at all of the investors, I look at really on the low side. Anything up above
Yeah.
that, it's really upside. So even if you look at around between a low side and the projection side, and you get into that 400, 500 mark based on your total 140 investments, huge. What we're projecting is probably still lower what technical aspect will show us. But this is really why I got myself interested first, and then I put all of my investors in front of the deal. So
and we're going to send this out along with our PDFs. You'll have considerably more time to review this on your own, but let's go on over here. I think we probably
yeah, you
should
can
we just
play,
go ahead
play
and
the video because that's where a lot of
All right,
Yep,
so
good.
I guess to get started, I'll just reintroduce myself. I'm Christopher Cothran. I'm the petroleum engineer for Falcon Production. What we're going to be going through is kind of a quick overview of our Raspberry unit drill program and development program. So the name of this unit is called the Raspberry unit. It's an old Exxon field. It's located just outside of Crowell, Texas, which, if you aren't familiar, is about an hour west of Wichita Falls. So they started doing drilling in 1955, and when Exxon was developing the field, they did their big oil in place field study and determined about 36 million barrels of recoverable oil in the field. Like Paul mentioned, about 12 million barrels have been produced. So there's 24 million barrels remaining. And we believe that through our development program and the new drills, we can recover an additional 4 million barrels. And so there's a few avenues that we're going to pursue to accomplish this. The first avenue is just kind of a re-energizing program where we bring online some of the shut-in wells that haven't been producing. And that's a really simple process that we'll get into here in a second. We can improve the disposal system, which will allow us to move more fluid in the field. There's also the possibility of deepening some of the shut-in wells. We have some upside potential in deeper zones that we feel pretty good about. And then there's the horizontal drilling program, which will kind of be the big fish of the field. So our first kind of phase going in here is going to be our maintenance and workover plan. And essentially what this would consist of is taking 6 or 7 wells, reworking them, getting new pump equipment put down in them and bringing them back online. It would also require increased storage capacity for water. Part of the field is that it makes a lot of water on top of the oil, and you have to move and displace that water and pump it back into its original formation. And so it takes a little bit of infrastructure. And if we're going to ramp up production, we got to increase our capacity. And then finally, we're just going to need to purchase some new equipment for the facilities, additional oil storage tanks, things of that nature. And I just want to highlight for those of you watching, kind of our thought process here is the previous operator. This is, if you look on the screen, this is kind of a timeline of the production. And the previous operator ended up having to shut in many of these wells just due to the fact that they weren't economic, and oil prices had dropped to, $20 or $30 a barrel. So they started shutting in wells, which is a common practice to kind of salvage the operation, reduce their overhead costs. And then additionally, there's another massive drop off in the production because they had a grass fire in the field that destroyed a lot of the electrical infrastructure. And they never really got things back up and running because shortly after that, COVID hit and oil prices fell even more. So we're kind of positioned in a really good place where the previous operator actually has since repaired all that electrical infrastructure, and oil prices are rebounding up to, I think, spot price today, $72 a barrel, which is a really nice figure. And we just have to get in there and put some of this equipment, get these wells back online, and we can reach that same production rate. They were making about 150 to 200 barrels a day before they had to start shutting in wells. So that's a simple little plan that can easily start making the cash flow really nice in this field. And so just to give a quick overview of the geological environment here as we prep to show you our drilling plan. The geological environment is called a reef. Mounded reef is what it's referred to as. And so you have these kind of reef structures that have these nice tall mounds. And what we're aiming to do is operate in the top of these mound structures because they provide nice little traps for oil. And so you can kind of see this figure here mirrors the actual environment that we're working in. These are some cross sections that are taken from the nearby fields that we're working. The Raspberry field, of course, being the one that we're working in. And you can kind of see this mounded structure in the data that's been collected from these wells that have already been drilled. There's also a nice fault system running between the Canal Creek and the Raspberry field to the north. And that kind of puts us in a nice spot where we know that these two fields are separated from each other.
Hey, Chris, just
Yeah.
a quick note on back on that slide, just for people who don't understand some of the oil field terminology.
Sure.
These this cross section is a compilation of well logs. So you want to talk just a second about what a well log is and how that shows the pay zones and all that?
Sure. So just kind of a crash course on well logs. Once a well bore has been drilled in the ground, you'll run equipment down the hole to measure various different characteristics of the rocks in the hole. One of the kind of main ones that pretty much is in every log is a gamma ray log, which measures radioactivity of rocks. And we know from many, many years of oil and gas operations what certain radioactivity and so that's just kind of one subset of data. There's a lot of different, I mean, I could sit here for hours and talk about all the different kinds of data that you collect from these logs. But once you run those logs and you put all that data together, you can actually create a really nice profile of what kind of the structure of the rocks in your field look like. And that is a lot of times how you determine where you're going to drill next, or what your production is going to look like in the field.
Perfect.
So just a nice little show here of what these wells are capable of and when they were drilled is I have this map here showing the initial production rates on a lot of these wells. So you'll see numbers underneath each one of these little green dots. These are all wells that were drilled during the 50s. And these numbers represent the initial production in barrels of oil per day when the wells came online, kind of their test production, if you will. And a lot of these are really high. You've got 531 on this well, 444 here. this well had 992 barrels per day when it started producing, which is a lot. I can tell you that much. So many of these wells IP'd over 100 barrels of oil per day on just simple vertical drills in the 50s, when the technology was just not nearly comparable to what we have today. This is just kind of second map. Looks a little bit prettier, but it's showing the same thing. It's just a heat map of the general production, these IPs in the field. And what I like to note is that this map kind of mirrors the structure of the field when you turn it over to our structure map. So this is a structure map for the top of what we call the porous caddo, the caddo being our primary producing structure or formation for the field. Like I said, you could kind of tell that the oil rates were a little bit linked to the tops of the structures, the darker red parts being the higher parts of the structure, and these green ones kind of being the bottoms of the structure, kind of tailing off deeper. There's also a fault system that kind of wedges in our field very nicely, and that provides a good separation from other properties nearby, so we know that nobody else is going to be getting to the oil in our field, which is always a nice thing to know. Then we have a quick representation of what our drill program would look like. These are just some example orientations or well sites that we would start developing out, and each one of these arrows represents about a 1,500-foot horizontal well that we could drill in, either going northwest or south from here. There's a lot of variability and options that we can play with on our drill program. Oh, and then nice part is that the previous operator, they had kind of started trying to work on something similar. So they already put together 3 of the well pads for us, which is a bit of overhead that we aren't going to have to worry about. So I'm going to show y'all real quick, just a quick cross section of what we're looking at in the structure and how the drilling actually works here. So this white line is going to kind of represent a cutout, if you will, through the field. So if you can imagine that white line is running through the wells pictured here, this is what the formation looks like along those lines. And it wasn't exactly a straight line, but it kind of gives you a good idea of what we're looking at here. So one of the things that, if you can imagine, and Carson kind of gave you the sneak peek of this slide, but if you can imagine that a vertical well penetrates into a formation and is able to produce, 197 barrels of oil per day when it was drilled, what you're actually getting when you penetrate into the zone is about a, what we like to say is a 20-acre radius of production from just this one little section here that's vertical that they are producing out of. The nice thing about a horizontal drill that would be a huge improvement over this, the vertical model, is when you're producing out of the horizontal well, you can imagine on each one of these lines, you have that 20-acre drainage area is what we call it. And that goes vertically through the entirety of this zone rather than just horizontally in this little isolated section here. And then you don't have to worry about the vertical limitations of being able to drain this area because you're going horizontal through the zone. So you have a lot more ability to really capture all of the production that you can get out of this one formation with a horizontal well. So for a quick comparison, if you have a vertical well producing 1,000 barrels a day and it's making a 2% oil cut, then you're producing about 20 barrels of oil per day from that well. And that's about what these wells do now. If we drill a horizontal well, we can up the amount of fluid we're moving substantially. So instead of 1,000 barrels of fluid per day, now you're making 10,000 barrels of fluid per day. It's about 10x. And so at a 2% cut, now you're making 200 barrels of oil per day from a well where originally with the same spacing, you would have only been able to produce 20. And there's also a nice upside to doing the horizontal well because it really opens up the possibility for us to hit any vertical faulting or micro fractures that function as little tiny traps or like pockets for additional oil. So when you drill one of these, you're not just expecting to hit this similar IP of 197 barrels of oil per day. We actually expect it to have an additional 300 to 500 barrels of oil per day just from the micro fracturing in the zone. And that's caused, again, luckily we have that nice faulted structure. Whenever you have these big faulted structures, you often see a lot of micro fractures in the area. So that's kind of the gist of our drilling program. And then we also have our kind of supplementary deeper upside that I had mentioned before, where we could deepen some of these wells. We have a known producing formation called the Atoka that looks pretty good in a lot of these wells. And as you can see, we've tagged it in a few of the wells here. Not all the wells go deep enough though. So for example, the 1403, this would have to be deepened to really penetrate the Atoka the way we're hoping. But luckily we do have a well called the water source well 3 that is it's much deeper than the Atoka, that we think could be a good test candidate to test this upside in the field and collect more data on the Atoka. So there's a lot of room to play with this field. And it's
so I'm a landman with the company, so I just kind of have the overall workings of the conveyance of the interest. And as Carson said, the interest is directly conveyed, so it's transferable at any time. Basically, our project has $3 million for initial funding, which is $60,000 per 1%. We're only selling 50% of this project. We're keeping the rest of it. And we're invested in this project pretty heavily. So, you know, we have a lot of skin in the game, and I know investors appreciate that. Just as the field stands right now with the workover program and bringing a few more wells online, we feel like this field can be up to 150 barrels a day in just a few short months, less than 6 months, and throwing out a nice cash flow. After that, the drilling program is where the real money is going to be made on this field. We believe that these wells will come in anywhere from 200 to, as Chris said, up to 500 barrels a day per well. So these could be real money makers. This field could throw off over almost $1 million a month in cash flow. So if you're a 1% owner in there, that's going to be pretty substantial. In addition, if you fund into the first 2 drill wells, you'll have the option to drill up to 18 more wells in this field. We have identified a total of 20 drill locations using the horizontal technology. And so this is just applying a new technology in an old legacy field that with proven oil that's in the ground. So we don't have to go out searching for the oil. We're not going to be drilling wildcats. This is just plain vanilla, get the oil out of the ground and know it's there. With regard to the revenue statements, we send out a monthly statement along with your expense statement and the revenue check. So once the project is up and running in full, we'll do that on a monthly distribution basis. And then once we do the first 2 wells, then we'll determine how much we want to go forward with a remaining drilling program, and at which time we'll send out on a case-by-case basis what we call an AFE, an authority for expenditure, which will allow each participant the ability to participate on that particular well. And if you do, then you are in that cash flow for that well. And if you don't participate on that well, then you just don't participate on the cash flow for that well. So it's really gives you kind of a easy look at what's going on and gauge whether you want to continue to put money into the project, if you like it. And actually, I'm going to show some economics. I'm trying to get the economics up. This project could self-fund itself after the first 2 wells. And basically the cash flow could fund the drilling program. And that's what we believe. Let me see if I can get the spreadsheet up real quick just to give you an idea. Carson, I think you need to stop sharing for a second.
Let me stop sharing and then see if you can pull yours up.
Can you see the spreadsheet?
Uh-oh, Paul's in action. He's got it up.
Okay,
Here we
good
go.
deal. Okay, so let me just talk through this real quick. This is the investment, what we call the CapEx schedule. And you'll see we have RB wells here. These are rework wells. This is kind of a timeline starting in May. We have some funds allocated to facilities upgrade, and then we average about 100,000 per well, do a couple wells a month. And these are the reworks, putting the wells online with new equipment and whatnot. Then we slip down here sometime around September and start our drilling program. We drill 2 new wells, and then most likely we'll be drilling 2 additional wells, we believe, because these first 2 are going to be very successful. So within a 1-year period, that would be about $7 million. And what that would look like on a production profile, this just gives you an idea on what we expect production wise. Here's the same wells across here. These are all rework wells. And then these are the new drills. And here we see 15 barrels a day and 30 barrels a day for 2 wells. And then we get over here, we're seeing 200 barrels a day. This is kind of on the low side for each new drill well. And then this number here is the expected ultimate recovery on those wells. And you can see about 200,000 per well on the new wells. So this is a Gantt chart, and it kind of just gives you a timeline on, as each well comes online, what your additional monthly production would be. And on the side here, this is a monthly production of oil. So you see we jump up from 1450 in May up to almost 25,000 barrels of oil by November. And so that's with a pretty aggressive little drilling program. And just in a short period of time, by 2029, we're almost, I got a little typo there, about 1 million barrels of oil just from this 4-well program. And as Chris said, we believe we can achieve about 4 million barrels of oil. So we can do about 4x on what's on the statement, but it's just to give you an idea of the program and how it can continue to grow and build. And let's see. And looks like my screen is locking up. There we go. Oh, so here's an income statement, which kind of corresponds with the what I just sent. This is based on 50% interest. And as you can see, there's 47 barrels a day, 91 barrels a day, 100 barrels a day, and it grows as we bring more wells online. 860 barrels a day, which is the 25,000 barrels a month. And then over here, you can see the cash flow. I'm sorry, this is the operating expenses. And then down here, you can see how the cash flow starts out in a negative because we're spending money in the field. This is your CapEx here, but it shortly turns positive. And just by the end of the year, we're already cash flowing. And this is a cumulative number, 650,000, 635,000. So here we're going into, by August of next year, this thing should pay out, and we're generating 700,000 to 600,000 or 700,000 a month. So it has a potential to really ramp up quickly. And so this is just to kind of give you an idea of economics just run out a few years. So we get to the end over here. We're talking about $34 million in revenues just from the 4-well drilling program and the 6-well workovers. We didn't put any more wells in here, but obviously the potential to do that is about 4x of that, the potential for the field. So that's just kind of a little quick on that program of the economics. So Carson, you want to get your slide back up there?
I can do that.
Okay. Or you can wrap it up on the last couple slides.
Um,
Are you back up?
yeah, I am. Hold on one second. All right. I think you left off right in here.
Yeah, so the last slide is just kind of a summary.
Do you want to go right here to project summary?
Sure. Yeah, so in summary, you know, it's a simple program for activating shut-in wells and installing equipment and upgrading the field. That's really not rocket science. Exxon study shows 36 million barrels of original oil in place. 12 million barrels have been produced. There's 24 million barrels remaining. You never get all the oil out of a reservoir, but if we can get up to 45% of the original oil in place, that would give us 4 to 5 million barrels, which is a very conservative number. And most of that production has been what we call primary. We're not talking about water flooding or EOR technologies. That's another form of bringing out the oil out of here that hasn't been implemented. And as I said, the directional drilling is where the big money is going to be made in this field. So you really want to participate on that, because this field could be 1,000 to 2,000 barrels a day with just a few wells. And at $70 a barrel, that's a pretty substantial income. We have got a lot of interest in this project. It's selling out pretty quickly, so I'll let Carson talk all about that, but we appreciate your input and appreciate a chance to present this excellent project.
So to answer that question, right here, our cash flow projections are based on these numbers down here. So the low number right in here, the 17,648, that's based on 150 barrels a day. The projected 32,836 is based on 225 a day, and vice versa with the high. When you get down into the new drills, it's based on these figures down here, and this is cumulative right here. So you know that 450 barrels on the low includes the reworked numbers with it. So anyway, I'm going to go ahead and, you know, steps to act, everybody. I put up Merek's contact information in the chat, as well as mine. You know, you guys can contact us via text, phone call, or whatnot. You know, we're pretty busy around the clock, getting filled up, you know, talking to investors. A lot of interest for obvious reasons into this deal, given its upside and, you know, risk mitigation and all that. So we will send out an email with you know, a recording of the webinar, the full deal info with our sign up docs and all that after the webinar. So if you're wanting to act, you know, just get a hold of us and let us know that you're ready to make a move. You know, our closeout date, as I stated, you know, the minimum is $30,000. Our closeout date is 8/15, which is in about 30 days. We're hoping to have it filled up quicker than that, but that is our official closeout date as of now. So anyway, I guess I'll open it up to questions, or if Kurt's there.
Yeah, good stuff as always, man. One question, this is from Steven. He asked if he get a copy of the presentation. I think he's talking about the video that y'all played. He said during most of it, half or more was blocked by black screen overlay. So I don't think that'll be an issue for you guys to send that back.
Yeah, that's not a problem. In our PDF, I have a full, you know, it's a very interactive PDF. So you can go in there, it'll have a picture of our documents. You click on that, it'll pop up. That video that I played at the very beginning, when everybody was coming on. It's a video actually of the field. That's in the PDF as well. It shows a picture. It says video of the raspberry field. It has everything. So,
Awesome.
you know, it'll have that picture of the, you know, the horizontal drilling, I think, and you click on it and the video pops up into YouTube and you can watch it on there. So
Cool.
you can watch it from your phone or you know, your computer. So
Good stuff. A pretty interactive session today. I saw some questions being asked. Mirek was answering a lot of those. So people on this webinar, people that are going to see this webinar, both through our efforts of redistribution and through Carson's efforts, I can't stress enough to reach directly out to Carson, reach out to Mirek. I can say firsthand from working with them now for going on a year, they're very responsive. They want to help investors. They want to help investors be successful. And that's really what, again, this platform of Think Realty is about, is connecting those dots, getting you with the investors with people like Carson that have deals that have a proven track record of success. Steven said it was blocked out for the slides, not just the video. So that presentation slide.
yeah, we'll send it over. Yeah, we'll get it out to you. That's not a problem. Yeah.
Cool.
So
We'll get you taken care of, Steven, everybody else on here.
100%. Yeah.
Yep. I'll get the list
Yeah.
over to Carson. He'll get that over to all of you. That's really it, guys. Unless there's any other questions, we're going to wrap up here. But again, reach out to Carson, reach out to Mirek.
Yeah.
Reach out to
Let me
the-
just go ahead. Let me just
No,
close
go
out
ahead.
by saying, you know, for me, you know, and this is just my opinion, not giving anybody advice, you know, there was a time to invest in Apple, you know, and that's when there was a line, you know, going out the store in 2007. You know, the time for me to invest in Tesla was when there was a 2-year waiting list, you know, and right now with not many real estate transactions happening, you know, I'm looking to still capitalize in a down market, and this is one way I can do it. The more restrictions they place on oil, not just in our country, but globally, the higher the price goes. It's just like housing is in California. You put restrictions on it, it becomes more expensive. I just want to answer this one last question for
Sure,
Brad. There's no fracking used on this, so you know there's no fracking or anything like that on it. So anyway,
I would echo
But
those sentiments,
he-
too, Carson, of what you said about kind of the down market. And I just did a webinar with RCN Capital last week, and one of the things that a big takeaway was there's a lot of inactivity right now. A lot of people are waiting, and in the opinion of some people are waiting until government and media say, hey, you can go buy a house now. What that's going to do is it's going to create a ton of competition that, quite frankly, isn't here right now. So whether it's houses, whether it's self-storage, whether it's multifamily, whether it's oil and gas,
yeah,
I always tell people the best time to invest is now. Do your due diligence, of course, get to know, like, trust, respect the people you're doing business with.
well, if the numbers
Good
work,
work.
yeah, I agree 100%. If you can get the numbers to work, you know, it's not a time to sit there, you know.
Exactly.
So anyway,
And I would impress upon everybody, we've seen historically, you can beat a down market. And in many cases, this is where long-term generational wealth is created in this, because so many people are being inactive. So I would stress to everybody, get in the game, do your due diligence, reach out to Carson and his team, see how they can help you, whether you're a client today or tomorrow. They're going to take the time to educate you. So with that, Carson, thank you so much for your time. Always
yeah,
appreciate it.
absolutely. Thank you, everybody.
Absolutely.
Yeah,
And everybody,
absolutely.
we'll get this out
Thank
to
you,
you all,
Kurt.
and have a great day.
Right outside of this one church town, there's a gold dirt road to a whole lot of nothing. Got a deed to the land, but it ain't my ground. This is God's country. We pray for rain and thank Him when it's falling, 'cause it brings a grain and a little bit of money. We put it back in a plate. I guess that's why they call it God's country. I saw the light in a sunrise, sitting back in a 40 on the muddy riverside, getting baptized in holy water and shine with the dogs running.